everybody, and welcome to the Sense of Security podcast. Today, I'm here with the senior economist at Interactive Brokers, Jose Torres. Hi, Jose. How are you?
Hi, Mary. Great to be here. Happy New Year. Great to be back.
Happy New Year to you, too. So, today we're going to talk about economic indicators, and I see three particular topics: productivity, something called Christmas, but it's not about the holidays, and then also trade balance.
Sure. So it's not Christmas as in the holidays, but the data was particularly cheery, Mary. When you
What?
consider the Challenger Christmas Gray survey depicted the lowest amount of job cuts in December, going back to December of 2022. And hiring intentions also rose pretty strongly. So
Good.
together, that really raised economic growth projections and quelled slowdown worries. We also got productivity data, which was buoyant, one of the best numbers in the past decade, the fourth highest. Excluding COVID, it was the second or third highest. And that's really terrific because when you have greater productivity, that quells the potential inflationary effects from stronger wages because each worker is producing more output. So that really helps the whole supply demand dynamics when you have higher supply of goods and or services. That's downward pressure on its price. So that was really good news on the productivity front. Trade balance, the trade deficit was the narrowest since 2009, going back 17 years. There was a lot of front loading, and that data has been particularly volatile. Opponents of the administration's onshoring ambitions will point to the volatility and how a lot of the pharmaceutical purchases, the imports were front loaded in other months because that's really what drove the better than expected reading in terms of a narrower trade deficit was the pharmaceutical imports. We just didn't really import that much during that month. But then folks that are supporters of the onshoring ambitions and President Trump's goals to bolster American manufacturing, they're going to point to the fact that it's been a 17-year low in the trade deficit. So that's pretty encouraging. Also, unemployment claims were pretty controlled. They've been well tempered. Initial claims came in at 208,000, slightly above the prior week's 200,000, slightly below the median estimate of 210,000. Continuing claims for the prior week that ended December 27th or so, those numbers came in a little above expectations, but nothing to worry about. In a few sentences, the Challenger Christmas Gray data alongside with the unemployment claims really dismissed a lot of worries in the short run that the labor market was running out of steam and signaled the potential economic reacceleration that a lot of us are expecting in 2026, including myself, growth rate full year of 3.4%. Today, we saw a Russell 2000 gauge of small caps that disproportionately benefits from an accelerating cycle alongside rate cuts. So that index reached an all-time high. Recently, what we've been seeing in the indices is essentially on a day that tech does well, the cyclicals don't. So you'll see the S&P and the NASDAQ rally, but the Dow and the Russell don't. But then the next day, on a day like today, you see the S&P and the NASDAQ, they're cooler. They're not performing that well, but the Dow and the Russell are really running. The Dow is up 50 basis points, 0.5% or 250 points. And the Russell is up over 1%. Like I said earlier, it reached an all-time high. Those companies, when you have a faster economy and rate cuts, they tend to do better than tech, as well as, of course, the more defensive areas like utilities, staples, and healthcare.
That's good. So something's happening tomorrow, right? With other numbers coming out with jobs and so forth.
Yeah, we have housing starts, building permits, we have consumer sentiments. The housing data is important for economists like myself, but not really that impactful to capital markets. So Wall Street in the short run, really Wall Street's going to be more focused on non-farm payrolls. Of course, Jobs Friday. We'll be here on the Interactive Brokers channel reporting on that at 8:15 in the morning tomorrow morning. But another huge thing is the Supreme Court decision expected tomorrow on President Trump's tariffs and whether he had the presidential authority to enact those broad based levies. Our participants here, based on our predictive platform, project that the Supreme Court is actually going to block the tariffs with a high degree of conviction. In fact, just a 23% chance that the Supreme Court will allow the tariffs to continue. Of course, the administration has additional measures that it can pursue if the Supreme Court blocks it. But on balance, the blockage would send interest rates higher because it would worsen the fiscal picture. Of course, from the beginning of fiscal year 2025 to today, the US has collected north of $300 billion in tariff revenue. So that's been helping to offset the fiscal budgetary imbalances that we've been running for 2 decades and change since the end of the Clinton administration, 2000, 2001. As far as what it'll do to corporate earnings expectations, it will actually provide, if the Supreme Court blocks the tariffs, it'll provide a short-term boost to corporate earnings. Some companies, they've faced margin compression due to the tariffs, particularly those that have been exposed to the nations with some of the more elevated levies. And then, of course, if they maintain the tariffs, that'll be good for the onshoring ambitions. That'll be good for interest rates, good for the fiscal picture. And corporate earnings expectations, I really wouldn't worry much about the tariffs on that front because the profitability story and the outlook is buoyant already. So we don't necessarily need the Supreme Court to go one way or the other to bolster profitability or to really affect inflation in any significant way, because the most significant, the most meaningful adverse effects from the tariffs are already behind us. Inflation is already receding to the mid twos. Soon it'll be the low twos. So really, I'm hoping that the Supreme Court, I know I'm in the minority, but I'm hoping that the Supreme Court allows the tariffs to continue. But we'll see what happens, and we'll see what the administration response is, because as we know, President Trump does try to get his way. So he'll try to maneuver or do something alongside his cabinet members to try to maintain his restrictive and really protectionist trade policy.
Incredible. And so I'm so glad to speak to you. As always, Jose, it's been a pleasure. So thank you so much. Happy New Year. And looking forward to more updates in the coming weeks.
Happy New Year, Mary. Great to be here. Thanks, ladies and gentlemen, for joining us here on Sense of Security for what's going to be a terrific 2026. And I look forward to speaking with you all next time.
Thank you.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice. Interactive Brokers LLC is a CFTC-registered Futures Commission merchant and a clearing member and affiliate of ForecastX LLC. ForecastX is a CFTC-registered designated contract market and derivatives clearing organization. Interactive Brokers LLC provides access to ForecastX forecast contracts for eligible customers. Interactive Brokers LLC does not make recommendations with respect to any products available on its platform, including those offered by ForecastX. Forecast contracts are only available to eligible clients of Interactive Brokers LLC, Interactive Brokers Canada Inc., Interactive Brokers Hong Kong Limited, Interactive Brokers Ireland Limited, and Interactive Brokers Singapore Pty Ltd. Forecast contracts on U.S. election results are only available to eligible U.S. residents. Futures, event contracts, and forecast contracts are not suitable for all investors. Before trading these products, please read the CFTC risk disclosure. For a copy, visit our warnings and disclosures page. Displayed outcome information is based on current market sentiment from ForecastX LLC, an affiliate of IB LLC. Current market sentiment for contracts may be viewed at ForecastX at https://forecastrader.interactivebrokers.com/ian/home.php.
This is commentary on economic, political, and/or market conditions within the meaning of CFTC Regulation 1.71 and is not meant to provide sufficient information upon which to base a decision to enter into a derivatives transaction.